Hey guys, welcome and welcome. Now I hope you've been following this channel and you've been making some kind of good peeps from it, from all the analysis we've been dropping here, because so far so good. I think 95% of the analysis we've dropped is doing very well, if not 100% of them, right? Some are still on its way to the direction we had predicted. Some was already there and so on. So but let's even go through some that it's already on its way and some that's already there. Let's look at across the pairs we've analyzed so far, and let's look at where we are likely to find them and what we are going to be expecting at this time. So if we analyze a pair to be going for a sell, let's look if we're going to find possible pullback before the sell continues, or if we're going to find it straight down to the price we want it to go to, and so forth. So let's look at that. Now let's start with USD card. USD card, remember the last time, if you've not watched this analysis, please do go ahead and watch it. Right, it's all on the YouTube channel. The last time we looked at this pair, we said that US dollars is weak. That's what we can see. That's what I can see on this analysis. US dollars is weak, and because of the structure I'm seeing on this USD card, I said that we're going to likely find USD card coming down as low as this zone here. Now, for us to help us to determine how to be able to follow up this US dollars, I said we can use our Fibonacci and draw across. We can use our Fibonacci. All right, it's already at 78.6. Right, somewhere here should be 88.6. I don't have that already, but that's the Fibonacci levels. Now, if you don't know much about Fibonacci, you want to go read about it, all right, or sometime before the end of the week or before the end of next week, I could make a simple video on that, so just to show us how to utilize Fibonacci levels. All right, so that's for that one. Okay, so now it's on 78.6, so we're expecting it to continue rallying down to 88.6. So how to do that? I could simply use my Fib properties, and then I can add levels, and I can add 0.8886. so I can have here 88.6. Right, these are derived levels, right? I'm not the one that derived it. These are derived levels, right? So it works in almost everything. So I'm going to take time and make videos out on that differently, right? So 88.6, this it just fell on the same level that I drew it. So it's on 1.23, so we're going to be expecting this to get here. If you notice that during my analysis, I really do not consider support resistance a lot, because I know that most times those are used for traps. So I look at the structure and then I check the direction of the market. All right, so that's for USD card. Again, I still think that this trade is still valid, right? It's still very much valid for the sell direction. For the sell direction, it's still very much valid. It's still very much valid for the sell direction. So I still think the USD card is going to come down somewhere to this zone. So you have to watch out for that. If you're going to buy, want to scalp on that, you want to buy for a short time, you want to be careful doing that, because I still think it's going to go down. All right, so this is my bias on that. Now looking at GBPUSD. Remember this trade, we dropped this analysis sometime earlier that year or so, 31st or 30th of December 2020. You can watch that. Around that time, we dropped this analysis on Great Britain pounds USD alongside with Euro USD. We dropped the analysis, and then we'll say this analysis that this pair is going to have break this zone. right? It's gonna break. You see, it has similar structure with Great Britain pounds, Japanese yen. So you think I'm doing the same thing, right? It has similar structure with that, but this time around I'm looking at GBPUSD. We've already done this Great Britain pounds, Japanese yen. So let's look at GBPUSD. You see, it's making the same structure because they are all base currencies. So sometimes you find them making the same structure because Great Britain pounds, US dollars, and Great Britain pounds, Japanese yens, they are all base currency. The base currency is Great Britain pounds. So sometimes you tend to make the same kind of structure, right? Okay, so now on this pair, if you follow this pair, you should be up already 276 pips, and that's a lot, right? So that's why I love direction. The truth is this. I'll tell you the simple truth about trading forex. One of the things I look out for is this, or the truth is that when scalping worked, and when intraday trading worked so much as an individual trader, it somehow passed, right? If you want to trade very well as a forex trader on this current time, using the technology you already have, because of the fact that everything that is created here is deliberate, if you want to make money, you need to be able to learn how to be patient, right? Patience is a virtue that is not found in everyone. So it means that if you want to make money in the forex market currently, now because of the algorithm that have been built to create all this, because of the machine that have been built to create all this algorithm on the chart, you need patience. And if you want to intraday, or if you want to scalp in the forex market, you want to build a machine that does the same thing, right? A machine that can dictate this machine. If you want to trade by yourself, trust me, you want to swing, or you want to keep position for some time, right? You must not swing for the whole year or position for the whole year, but you can get trades that could take you for 3 weeks, for 1 month, for 2 weeks, for 1 week. You see, if you can have this kind of presence, you're close to making money in the forex market. If you have this kind of presence, I had the right skill, right? Because all the movements you see in the lower time frame, I term them to be noisy. Why? Because those are the places that the traps have been created. Those are the places, not because you can't find traps in higher time frame. You can't find that, but again, it can be controlled, and you can actually see it more clearly, right? So what I'm saying might not be making a lot of sense until you come to the academy, right? We'll be able to break down this thing step by step on how it happens, and you can be able to see what we usually see, and why we can say, oh, this support is likely to be broken, and this resistance is likely to be broken, and at the end of the day, that same thing happens. Why? Because we are actually working with the structure. We were actually dictating the machine and dictating the psychology behind the algorithms. All right, let's go ahead with this. Now, looking at this, like I said earlier, we've already, if you took up this trade to 200 something pips or so, remember that this was a strong resistance level, right? I would say it was going to be broken. It's broken, and that's it. It's all broken. So now we'll say that now it's broken. Where else are we going to find Great Britain pound, US dollars? Don't be excited about this, right? Don't be carried away either. When things like this happen, when zones like that are broken, as a breakout trader, to be conscious. All right, so because there are possible pullbacks around there, which you can see here too. When the market made something like this, when it broke out when it broke out from this zone, you saw there was a pullback there, right? So if you breakout trader, you would have bought this zone and put stop loss here, and would have taken your stop loss too before it goes down. So that might not always work out for you the way it should. All right, but let's go ahead. Looking at the stream, where is it going to? Now I've drew at my Fibonacci levels on Great Britain pounds, US dollars. Now I'll try to do something. I want to clear up my chart. I like to clear up this chart so that I can have a very clear view of the market. All right, it's very important for me that I have a very clear view. All right, looking at this, where else do we expect Great Britain pounds US dollars to be? Now, looking at the structure of this market, I think Great Britain pounds still has some way to go up, like we dropped in the last analysis. So I still think the old analysis is still valid. Following up on that, I still think it's still valid. Remember, I promised to always follow up on the analysis we've dropped to be able to tell us when it's valid and tell us when it's no longer valid, right? So now for this pair, I think it's still valid for this pair. All right, so how do we write it up? Now I'm going to take off this high. All right, I'm going to take off this high. Why? Someone is asking, why don't I take the highest high? Well, there's a reason behind that. Using Fibonacci is a very flexible tool. So if I even had to take from this high, it doesn't really make much sense. So there's not much difference on that. All right, I'm trying to get a very closer level. You see, if I take it up from the high, this zone that will anticipate or will envisage to be the next take profit, this one is 50.0 Fibonacci. So it's not still out of place, but I'm going to do something. I want to get a zone in between there before the 50.0. What I mean is this: I want to get a price between here and here, somewhere between here. So that's why I'm going to take it very close. All right, so I'm having, did I draw that correctly? I think I didn't draw that correctly. Let me do that again. All right, so I'm having from here to here. Okay, I'm correct. So I'm having 88.6 Fibonacci around there. So yet then again, 88.6 Fibonacci around there. 88.6 Fibonacci. I'm having that around there. So it's in right. So that's what I'm expecting. So I'm expecting this pair to come to this zone here, right? To this zone here. So that way I can be able to take it. So I can be able to take the nearest Fibo as a take profit before considering this one here. That's 50.0 Fibonacci. So I'm expecting that to happen, right? So that's basically for that one. Between this zone, the point it is now, and this point, so I'm trying to get the Fibo that falls in between. So I'm having 8.6 here, sorry, 8.6 Fibonacci here. That's my point. That's the price I'll be looking at for the next TP. Why I did that is this: each time the market rallies off or can find likelihood of pullback, and the easiest way to get a pullback is to get at the point of pullback. Of course, the Fibo levels that will help you to be able to know where to, because if you're trying to take it straight to this particular high, right, not because it's not going to get here, but at some point it's going to make pullback. So you want to know where is the nearest zone to play around with, and that's, thankfully, Fibonacci does a lot of magic for me when it gets to that, right? So like I said earlier, I'm going to make a video. I'm going to make a video about Fibo, simplicity of Fibo. The simplicity, I'm not going to make it very complicated, right? So even if you don't know how to use that tool, I'm going to simplify how to use that tool, so that in case you've watched any complicated video on how to use Fibonacci, you might not need all that to draw Fibonacci, right? So I'm going to make it very simple. So you go ahead and subscribe. You're going to get notifications when I release that video, maybe within the week or next, like I said earlier. So I'm going to get that done. All right, so this is basically what we're expecting Great Britain pounds US dollars to do, right? Basically what we're expecting to do. So from this point, like I said, that the blue line we'll have here, which is this, we'll have 1.4108. So this is where we expect it to go before it probably rallies up to that. All right, let's also look at US dollar Japanese yen. You know, we've looked at this pair earlier on. You can also watch out for this pair on the YouTube channel. Now remember that for this pair, we'll obviously mention that where I think this pair is coming to is here. It's usually very amazing how we can dictate a very long-term trade, and it's you thank me later on that. I think this is what we're going to see on this trade. This is what I basically think about this. Now, why do I say that? I follow this pair for quite some time, and if you watch the YouTube channel, if you watch the YouTube video about this pair, we actually made mention that it was gonna make this pullback, and we're gonna find something like before we take it down. All right, thankfully it's doing that now. All right, so it's gonna make pullback again somewhere. This is 1 4 hours time frame. So after it rallies down dip a bit, you can find the pullback somewhere here, then on the lower time frame all the way down. That's what I think this US dollar is going to do for the short term. Then for, of course, my team, for swing traders like us, for people that live to trade for some time, swing traders, let me explain this. Now, what I've observed about, or what I noticed about this thing called swing trading, it's not really something that people can do. Even if you're an impatient type, you can manage to do that. Everybody has a level of patience in them. Let me give an instance. If you're very, very, very hungry, right, and at the moment you're tied in a place that you can get what you want to eat, you can't even get snacks to take, you just tied in a place you can't get anything to eat. Now what happens? You're not going to stab yourself to death, all right? You're going to wait until you get off that place and go get something and eat. So what does that mean? You have patience, right? So you just decide not to engage that. So everyone on earth has measure of patience, right? So that way you can actually stretch yourself. Even if you're an intraday trader, you can leave trades to run for 1 week. You can enter a trade and probably that trade is not going in your favor that day. Have you noticed that? Let me give you this instance. Have you noticed that if you're a trader watching this, have you noticed that if you're on a trade and out of impulse decision, you leave the trade early enough, if you come back to that same trade after 3, 4, 5 days, that trade is doing what you want. Or after 2 weeks or after 1 week, that trade is not doing what you wanted it to do. Now, do you know what happened to you? You were just impatient. You would have made money in that trade. You wouldn't have closed that trade on lots. Now, I was speaking to one of my students in the UK, and he told me his challenge is this. He takes trade right, but he can't stay on a trade. Now, during our 2 or 1 month of education, he was under the tutor on the mentorship and all that. During 1 month, 2 months, is 1 month and a half or so that we started the classes. Now he could take up a trade and he wouldn't mind, that's the way he works. Now his emotions are no longer getting back to him. Now we're able to work on his emotions. Now, same thing we are open to do to everyone that wants to have that. Now, trading is not very difficult. Traders do make it difficult. If you want to understand trade, I will advise you, if you want to have clue about how professional traders trade, I advise you to go read the quotes on the profile, the Instagram profile. You can visit us at Davecon FX, right? The Instagram, if you're not following us on Instagram, on Twitter, on Telegram, we are all on all social media handles. We are actively on. You can follow our quotes on those social media handles. All right. Now you will notice that all professional traders' quotes are linking to leaving your trades for some time. Now, why do they do that? Scalping doesn't work again. I'm categorically saying it because not because you can't make money from it, but because you have high tendency of losing money scalping than you have on leaving trades to run for some time or on swinging the trades. Patience, it's a virtue and it's not fun in everyone. It means that we still have high percentage of traders losing money because they've not built their patience. All right, back to the chart. What I think this is going to do is this. Like I said earlier, for my colleagues, that's our patience team. If you're in our patient team, you're welcome. All right, so I think something like that. I think it's still gonna come a bit of down. This is my target zone on this trade, right? That's my target zone on this trade. Right, let me do that again. Okay, it's already here. This is my target zone on this. I expect it to come that way down. Yes, for USD/JPY. So for me, it's still valid. There's gonna be a lot of pullbacks. There's gonna be a lot of activities around there. If you're in intraday trader, doesn't mean you can utilize the opportunity, but the only difference is you might be having a wrong entry, right? So you'll be having a wrong entry. So if you were okay, so if some of our traders will know what to do with this chart at this time. If you're intraday trader and you're on that Davecon FS Academy, I'm sure you know what to do about this trade at this time. All right, so that's basically what we'll have to review on the different currency pairs we've looked at before now. So what I will do is I'm still gonna watch back the previous currency pairs. I'm gonna look at them and I will still drop follow-ups on them, so you don't want to miss that subscription. Go ahead and subscribe, and then you get the videos on the Fibonacci and the other videos on the follow-up analysis. That way we are all on the same page. Thank you once more for watching Index.